I never say to someone to fix because they love that rate. I say to someone to fix because they want the certainty and the security that they know what they'll be paying every single month for the next 2 to 3 years.
We'll talk about fixed variables, principal interest. Tell me, what are your thoughts on that?
Yeah, all the big ones. There is other ways. You can buy a property in a trust structure, in a company structure, and they actually might be better for your situation. Now, you don't want to buy the home that you love because it looks cute. You want to buy the home that's going to be best for your finances in the future.
Welcome to today's episode of Elevate Your Wealth, and today we're going to be talking about property. So lots of Australians, we love property, but internationally as well, it's good to learn about property. So we're going to be talking about how you can build wealth through property, what are the right structures for lending and what you should think about. And I'm joined by a wonderful guest today, okay? So she runs Apex Mortgage Advisory, and I've known her for years and worked with her with several clients, and her clients just rave about her, which is amazing. So I'm really happy to have her here. So Lauren, welcome to the show.
Thank you, Victor. It's wonderful to be here. Thanks for having me along.
Amazing. So I know we're going to be talking about some interesting stuff, and we're going to be talking about something you've written, something nice out there, which we'll get to. Before we jump into things, just tell us a little bit about your story, yourself.
Yeah. Brilliant. Well, I guess it all goes back to probably a little bit more than 15 years ago when I kicked off my career as a graduate at some of Australia's major banks, but I've also done a stint overseas in banking. But I must say, out of all the roles I've done, they've all had something to do with lending. So whether I fell into it or planned it that way, lending is in my blood. And I guess that was probably one of the main catalysts for starting my role and my own business at Apex Mortgage Advisory is because I just love it. I love being that person that helps someone buy their first property or buy their next investment property or go, hey, do you know what? You can buy a property in your super, and they just are not aware of it. So it's a real privilege. And it's actually funny because it comes across that the world of lending is so complicated.
It is.
And I agree, it is. My first week at the bank, I remember starting, and obviously you have your normal induction program.
Yeah.
But I was also handed a 2-page sheet of acronyms.
Oh,
and I'm like,
the good old acronyms.
This is crazy. I didn't even know what any of these terms were. And in reflection now, I'm like, this is exactly how first home buyers feel, or investors for the first time feel when they're trying to get into the property market. It's crazy overwhelming. So that's what I'm here for. I want to make sure we're making everything simple and easy. And my main goal is to help 10,000 Aussies get into the property market before I retire. So
done.
I'll either be working till I'm 100 or I'm really going to have to buff up my education material that I'm putting out because I'm really passionate about demystifying the world of property for the everyday Aussie.
Amazing. Okay, 10,000 clients. Okay, yeah. We don't want you working too long, so yes, we'll ensure you do that before you get to 100. Okay, so tell us a little bit about your hobbies or anything that keeps you busy or excited. Obviously, I said you like writing and putting material out there, but what else?
Well, the beach is my happy place.
Okay.
And also traveling. My husband.
True Aussie.
Yeah, absolutely. The beach and traveling. Yeah, my husband and I joke that we're semi-retired because our goal in life is to take a year off every 5 years and go traveling. So we've had a year across Europe. We've been in a motorhome for a year across Australia.
Okay.
And we backpacked across the Americas, North, Central and South with our 11-year-old a few years ago. So we love it. That is my joy in life. And I also have a secret passion to create a cooking. I should say, if I could do a job for passion, it would be having a cooking show.
Cooking show.
I love cooking.
Oh,
so,
nice. I'm sure you can definitely TikTok that one.
Yeah,
Just
absolutely.
TikTok yourself
so.
cooking. But
overlaid with mortgage advice or something.
exactly, the spices like your LMI, you can have a bit here and there.
I love it.
Yeah, no, that's really good. Okay, 5 years and then you take 1 year off. I think that's a very good way to kind of live life.
It's too short, isn't it?
It is too short. So, okay, amazing. Okay, so let's dive into mortgage, investment property lending. I think one of the things out there is people want to secure finance, and sometimes for first home buyers or first time investors, it may be a little bit hard. So, how do you help them? What are the things they can actually look for in terms of when they're trying to secure?
Yeah, look, I don't think there would be a mortgage broker on the planet that wouldn't say the biggest challenge that our first-time investors face is serviceability. So the reason this is such a challenge is that we're not in the 2% interest rate market like we were 5 years ago.
Yeah.
Interest rates have gone up. Obviously, we're hoping we're now on a downward environment, as analysts are predicting. But serviceability is still a challenge because banks don't look at what your repayment is now. They're looking at, if we put a 3% buffer on that repayment, can you still afford to pay it back? So I have a lot of conversations with customers just educating them is, yes, absolutely, I know it looks like you can afford this, but banks are being really conservative and making sure you're never going to get put into a position where you just won't be able to pay back that debt. So serviceability is a big one. The other challenge and almost like advice that I give everyone is to realize that not all banks are equal. So how it plays out, here's a very common story, is you own your property, you go to your day-to-day banking, you say, hey, Mr. Bankman, I want to buy an investment property. They do their thing and then they say, no, Victor, sorry, you can't get an investment property.
Not good.
Not good at all. So that might delay you getting into the market by years, or it might completely turn you off and you never actually end up buying a property because your bank said no. But guess what? I've got 50 banks that I can access and it might not work with Bank A, but it might work with Bank C, D, or F. So that is one big challenge, is just thinking that what your bank says is gospel, whereas there might actually be another way.
Yeah. And I think one of the things, when people hear that as well, they're like, I don't want to go see 50 banks.
I know.
Because even just the effort to see your own bank was enough, okay? And that's where mortgage brokers come in, and that's where you come in. Is like, yep, okay, well, I have a tool, and I just put your details in there, and then I can see which bank will allow you borrow.
Absolutely. Spot on. I take the work out of it. It's great. Yep. And I'm free. That's the biggest benefit.
Yeah, exactly. So definitely good. Yeah, because people need to understand that. Each time I sit down with clients and they want to do, I'm like, I don't get it. Why wouldn't we see a mortgage broker? Because even on that, they get the same rates seeing a mortgage broker or not seeing a mortgage broker. So I'm like, it's a no-brainer.
That's right. Agree.
Yeah.
Well, I obviously agree.
Okay, so obviously the lending market is it's a market, so it's always moving. Okay, so what trends are we seeing now out there that investors can actually think about, or what are you seeing that you should educate us on?
Yeah, definitely. So I'd say there's a couple of big ones. Interest rates is the hot topic, obviously. We've got most analysts are predicting 2 to 3 drops this year.
Yes, please.
So, oh my gosh, yes, please, indeed. And we're seeing that playing out in the market. So there wouldn't be a week that goes by now that I wouldn't be emailed by banks saying that they're dropping their fixed rates. And that's a really strong indicator of what these banks are predicting is going to play out in the interest rate environment. So that's a one. But actually, why we're talking about fixed rates, Victor, is I never say to someone to fix because they love that rate. I say to someone to fix because they want the certainty and the security that they know what they'll be paying every single month for the next 2 to 3 years. But it is a really interesting thing that we're seeing playing in the market at the moment is around fixed rates.
Okay.
The other one, which is a positive, is we're seeing a shift towards banks being more favourable to self-employed applicants. Now, this has not been the case in the past, but there's some really great new policy changes that have hit the market in the last 1 to 2 years, where we're even looking at things just at 1 year in isolation for self-employed financials, which is helping businesses get into the property market sooner. So hoping those things will continue.
Yeah. So no, I think that's very important as well, because obviously the trends that happen, or what happens with trends and all that, is people can't keep up to date with that. And that's where you people come in, where you're onto this every day. This is what you wake up and then you breathe and then you find out what's going on. So very important. And obviously, speaking about the business owners or self-employed, most people might have that non-straightforward income streams. Okay. So any tips for those business owners looking to apply? Because I know in my first year of business as well, I didn't think I could borrow anything to buy a property, but then sat down with a mortgage broker and boom.
It can happen.
It can happen.
Spot on. There is horror stories. Like I actually don't think anyone in Australia could say they haven't spoken to someone that has their own business that says the bank wouldn't lend me money. And I think that's still in our minds that it's super difficult. And don't get me wrong, it's not all roses. It absolutely is. There's a few more hurdles that can go through. But my best piece of advice for any clients that own their own businesses is to have a dream team around you. So you need your financial planner, your accountant, and your mortgage broker working as a group for you. So whether it's putting a plan in place for this is where you see yourself in the next 3 to 5 years, what do we need to have set up now to make sure you can achieve those property goals? So if you're self-employed and don't have a dream team, get a dream team.
Yeah.
Very, very important.
Yeah, totally agree with that. I think generally when people think about that, they don't see the benefit until it's too late, because as you said, you have to plan. Okay, well, I don't want an investment property now, I'm focusing on the business, but next year I want, okay, how should I structure my accounting? What should I be doing with my finances right now to get me there? So
absolutely. And it's not just the big banks that lend to self-employed clients. There's so many others that look at out-of-the-box scenarios. So we know in business there just might be something that happens that's outside of the normal that impacts your financials. But guess what? There's lenders that can also tailor a loan to help that scenario. You just might pay a little bit for the privilege.
Yeah. One of those 50 will be able to help.
Absolutely. That's right.
Nice. Okay, so let's talk a little bit about loan structuring and just growing, your property portfolio. Look, I'm a financial planner and I love when clients have, 1 or 2 properties. I think diversification is definitely very important, but structuring and being able to grow that portfolio is important. So, we'll talk about fixed variables, principal and interest. Tell me, what are your thoughts on that?
Yeah, all the big ones. That is probably the main thing that comes up first when we're talking to a person that's looking to buy an investment property is how do you want to repay this debt? So do you want to just pay the interest cover the interest? So the amount that we give you to begin with will never go down, or are you actually looking to knock it off and in the end of 30 years have no debt left? So I do find that most of my investors are opting for an interest-only loan, whether that's coming from advice from their accountant because it might be a more tax-effective way to set it up. That's generally the case.
Yeah.
But also it really does free up cash flow. So there's some real benefits of having that interest-only loan in place. I find my main customers who are investors that have principal and interest repayments, they maybe only have a goal to have 1 or 2 properties. Yeah. So they just want to get them knocked off. They want to have phenomenal equity sitting there so that when they do sell down the track, there's no debt to repay and they just can retire earlier. So that's a big one. When it comes to more, do I go down a fixed rate path or a variable rate path? Variable rate normally wins every day when it comes to my investors because I just feel like they're not as particular when it comes to interest rates going up or down. They like that flexibility. I've got a couple that have fixed, but it's not common. It's more common I'm seeing them to have the variable rate loans. And then the last big thing when it comes to structuring, it actually happens even before they chat to me. So people think you might just need to buy a property in your own individual name or if you have a partner in a joint name, but I'm preaching to the converted here. There actually might be much better ways
Let's convert a few there, Tisha.
That's it. So there is other ways. You can buy a property in the name in a trust structure, in a company structure, and they actually might be better for your situation. So yeah, that's a big one. Getting it set up right might save you a lot of money down the track.
Yeah, 100%. Yeah, and I think, we had a guy here a while ago who talked about land tax. That can be very big if you don't do your structuring right.
Hold on.
And you've mentioned very, very key points like generally the mom and dad investors, they might have 1 or 2 properties in their name and then run out of borrowing capacity and, then they have good super balances as SMSF kicks in and all that. And personally with the fixed and variable, I have my own opinions on that. And I think I generally tend to like the variable as well, especially for my clients as well. So, and I tell them my opinion, right? So as you said, we work together with the accountant, mortgage broker to get what's best for them. And for the interest only, and this is very important because I always tell people about diversification. Like rather than paying down the principal, sometimes it might be a good opportunity for you to use that principal and put it into another asset that can give you, more returns, maybe
Absolutely.
10% on average over a 10-year period, and that helps diversify and gives you more flexibility. So I think that's generally very important when we help clients with structuring. I think moving on to the next question, where people then take out equity from your home properties, okay, and they do this to then buy more investment properties. So how does this work practically? What are the risks involved in this process?
Yeah, it is so common. Like it's very rare for someone to save up a deposit in cash to buy an investment property.
Yeah,
99% of the time they're using equity that they have in an existing home to help buy the next.
And sorry, just to mention on that, there's so many people that don't actually know that. They're like, okay, I'll allow you go. I'll allow you land.
What is this? How do you actually do that? And because it sounds like, what? Using equity in your existing house? Do I have to sell it? Okay, so let's play out an example. Let's say your home that you live in is worth $1 million. Okay, so we're going to use these easy figures.
Easy figures.
Most banks will lend you up to 80% against that. Now, let's say your current home loan's only $500,000. So the bank would say, equity-wise, you actually could go up to 800, but you only owe 500. So let's say we have 300,000 of equity to play with. Now, you don't need to sell your house. You don't need to change your home loan, because all we do behind the scenes on paper is actually use that equity that you have in the home. And the reason we do that is it gives the bank comfort that we have another home to draw on if things go wrong. And then you can actually use that to buy 100% of the purchase price for your next investment property. So many of my customers buy an investment property with zero deposit because they're literally just using the on paper equity behind the scenes. So it's very, very, very clever. But it doesn't come without risks, obviously.
Oh, okay. Yeah.
So
Tell us.
we borrow, the more you owe, and the riskier it is if something happens in your circumstance. You've got bigger debts to pay back. So obviously that's a big one. I always recommend having your safety net. There's potentially some of your listeners that have read the Barefoot Investor book about your fire extinguisher account.
Yeah.
And I actually love that term because you do need a backup account. Rental properties, we have vacancies. Someone might unexpectedly move out, might not find a tenant for 1 week or 1 month. Who's going to pay back the loan? You're not going to have that weekly rent coming in. So anyway, it is a risk, but having the backups and the plans in place is really important.
Yeah. And that's why, as you mentioned before, having your dream team, because, each person can help. That's where we come in and just ensure that if things unfortunately happen where you're unable to work due to injury or illness, things like protection need to be talked about as well. So I think some people are wired to think about the risk and zoning too much about it, but if we use statistics, the vacancy rates in Australia are like on average 2-3%,
Spot on.
So that means out of 100 properties, only 2 of them are empty. And out of that period as well, some of them might just be empty for 4 weeks. So as you said, if you've saved enough to pay your mortgage for 1 month on investment property, you're good. You don't need to worry about too much there as well. So I think people need to just sit down and understand the risk, and then they can actually make better decisions on there. Yeah.
And help you sleep at night. Because
you sleep at night.
If it all blows up, I've got a plan in place.
Got a plan,
Victor's my guy. He put my income protection there, and we've got the savings sitting there. So
yeah, pretty much. And I remember when I first used equity from my own property to buy another place, it was just, I was like, no deposit, nothing.
I know.
And they're like, nothing. I was like, okay, cool.
It almost feels like, it's like, what, is this pretend?
Yeah, exactly. It's like, did I really buy that place?
That's right.
Until the mortgage payment comes, it's like, I got the place.
I did, yeah. Balances it, doesn't it?
Yeah. So let's talk a little bit about planning ahead and just building a strong, portfolio.
Yeah.
So when building a property portfolio, I think it's good to have strategies in place so you can manage the mortgage, and also have exit strategies, because I think it's just important to plan how you will exit. It doesn't mean you have to, but it's just like, okay, that actually even helps you sleep better at night because it's like, okay, if that happens, I'm going to do this.
Spot on.
Yeah.
That's right. And that's a big one for banks, actually. So if you've got anyone, particularly that might be hitting retirement before the end of their contracted loan period, we actually need to give a story to the bank as to, wait a minute, you're not going to be earning income anymore.
Yeah.
How are we actually going to pay this debt, or what is our exit strategy, as you said? So some really common ones that I get people to start to think about. And obviously they've had conversations with their financial planner and accountant around what this looks like in the future is, do you plan to downsize your big family home? Are you just going to move into maybe a 1 or 2 bedroom unit and then that can reduce some of your debt? Are you looking just to hold that investment property for 5 years or 10 years? Or do you just want to keep it forever because it'll actually be your income source during retirement? So there's a lot of questions that you need to go through before you buy that home. Structure again, how do we want it structured? Who do you want that property going to at end of life? That's another big one. And making sure that assets protected and transferring as per your wishes. So there's some really large ones. Even other ones, we set up loans normally on a 5-year interest-only period. But what happens at the end of the 5 years? What's our plan then? Is our plan to refinance you to another bank and do another 5 years interest only? Or again, you're looking to sell the home? What are we looking to doing? So conversations up front are critical. So we're all on the same page and we're ready to go.
Correct. Yeah. And it doesn't mean things don't change because, it's very hard to predict the next 5 years, but just having a plan in place really gives you confidence, peace of mind. And, whatever happens as well, you have the right professionals who help you deal with all that, which is quite important.
Absolutely.
Because I know some people think about the interest only. They're like, okay, well, after 5 years, I'm going to have a bigger payment to pay. It's like, well, no, you can actually just refinance again.
Exactly.
Which works well.
Spot on.
Yeah.
That's exactly right.
Yeah. So I think from your experience, right, what are the key habits or strategies you've seen successful property investors consistently apply? Because some people sometimes just don't know the right strategies to put in place to be successful.
Completely.
While as others may not have the right attitude, but for those who want those strategies, what are the tips? What have you seen?
Buy strategically, not emotionally.
Okay.
That is my biggest one when it comes to investment property. So it's different to a home that you need to live in. You're buying it 99% of the time because it's there to make you money. Whether you want to get income coming through and that's how it's generating you money, or you wanting that capital growth that the property will give you over the long run. Now, you don't want to buy the home that you love because it looks cute. You want to buy the home that's going to be best for your finances in the future. And I do see that time and time again. People buy a home because they're either actually, this is a big one, Victor.
Yeah.
They buy in the town that they live in because they're comfortable there. They know the streets. They know the market pretty well. They can drive by. They can do the inspections.
Yeah.
But what if your town is not a great place to own an investment property? And I guess calling in another specialist, this is where buyer's agents actually can be pretty powerful. They can look nationally for you. It might actually not even be right for you to say buy a home in New South Wales. It might be one in Queensland or WA that is the best for you. So they're the smart. That's absolutely my smartest investors. Okay. They buy with their brain. Yeah. They don't think too emotionally.
Oh, I love that term. Buy with your brain.
Yeah, absolutely.
Is that yours? Can we
copyright Lauren Worldon? No.
Lauren says buy with your brain.
Love it. And the other one, which it's a common saying, but I think people don't live up to it, is time in market is way better than timing the market.
Yeah.
We procrastinate as humans. There's always, it's not a good time for this, or we'll wait until after that. And then we find, oh no, it's actually been 5 years and why didn't I buy that home 5 years ago? So that's my other thing, is don't procrastinate. At least get all your options, have a chat, see if you can get that property sooner than you actually think.
Yeah. Very, very key points there. I think my first property I did not buy with my brain. Yeah, definitely didn't. I liked it. I was like, yep, I'm going to buy this. And And then years later, I'm like, okay, no, that wasn't a smart decision. However, the second one, I was very happy with that because I remember I traveled and, well, there's a second learning for this, which I'll get to. But anyway, I traveled to that state and then I looked at it. I was like, oh, I don't like it. I don't like it. And then, but I bought it. And why I bought it is like good financial decision. Like I didn't like it. I would never live there.
Yep.
But I was like, yep, that is actually a very smart decision. And that worked out long term. And the thing I should have actually done then as well to improve, obviously, my process then was use a buyer's agent. Because people have bought properties without even going or seeing where it is.
Spot on.
And that's a good financial decision because you buy with your brain. You're buying it to build wealth. You're not buying it to live in it or look at it and be, emotionally satisfied. So while, as you said, if it's your place that you're living in, yes, you wanna love it. You wanna ensure that it's the place. So
maybe it's like some people buy because like, I don't want people to think I own this ugly home or whatever it might be. But it's like, guess what? I'm going to be able to retire before you because I made some smart decisions earlier on. But no, it's an important one.
Very important. So very, very, very key points. And I always tell this to my clients as well. It's like, well, look, sometimes your professionals have made mistakes, so they can tell you not to make the same mistakes. And that's why I'm very open about. My first one, I did not buy with my brain. Everyone after that, I definitely bought with my brain. So
love it.
Nice. Okay, so in terms of smart reasons to refinance an investment loan, and when should a investor seriously consider that? Like, is this a time frame thing? Is it a feeling thing? What does that look like?
So most people say for rate. They'll be like, to get a better rate. That's why people want to refinance. But there's more reasons than that.
Yes.
So I'm not going to lie. It's if I get any inquiries, it's always, can I get a better rate? And it makes a big difference. Like if we play it out, if you've got a $600,000 home loan and I can save you 0.5% interest, that's $3,000 a year. Like that's decent money. That might pay your landlord fees for the year, might do a small family holiday somewhere. So money does matter, absolutely. But that's one reason. The other main catalysts I find is something's ending. So they're finishing up a fixed rate, they're finishing up an interest-only period, and they're like, ooh, what do I do now? What's next? And that's a really good catalyst for us to review your whole situation and say what works in your scenario. And then the other big one is that they're looking to buy another property. So that there's no better time to go, okay, we want to use the equity, which you guys already know how to do that now.
Exactly.
And your property. And but we might want to restructure at the same time and get it set up. But a rule of thumb, if anyone's out there, if you've had your loan for more than 2 years and you haven't had it reviewed, you need to reach out today because there absolutely could be things that you could be doing to save you money. So 2 years is always my little golden time that it's time to have a chat.
Funny enough, I was sitting down with clients yesterday and they had not reviewed your loan for 2 years, and you can just see that they're not getting a good deal. So generally it's good. I always relate these things to almost like a phone. Like new features come out every year, but the first year is not too much of a difference. But by the time you get to the second, third year is a lot different in that regard. So you definitely want to be doing the same for your finances.
You can have my buy of your brain. I'm going to have your phone analogy. That's a great one.
Done.
Because it's so true. Like you spot on. I do banking reviews. I touch base with clients every 6 months. We're doing more in-depth one at the 12-month mark. And sure, there is some small things we might be able to do, but not game changers at that point in time. It's really year 2 or year 3 that you go, wait a minute, guys, this is time that we now need to talk seriously around your next steps. So, good on.
Love it. Okay, so can you share an example where a client made a great strategic move with your property lending, that others could learn from?
Yeah, brilliant. Let me share a recent example. So clients, they own a couple of investment properties at the moment, right?
Okay.
They're with a bank. They've had them for quite a few years. So I think one of the loans had just shy of 15 years to run on it, and the other one had about 18 years left to go. Now, their goal in life is to buy as many investment properties as they can before they retire. So buy. Paying down debt is not a priority of theirs. It's growing their wealth. So what we've done for them that's been a really strategic move to help them buy their next property sooner is actually refinance those loans to another bank. We've bumped them back out over a 30-year loan term. Now, what that's done is 2 things. One, it's freed up some of their cash flow that they can direct towards the new property purchase. And it's also increased the amount the bank will be willing to lend them because their monthly commitment's also reduced. So they've got all the time in the world to pay those debts off. That is not a goal or a priority for them. Their priority is that they've had a couple, they bought them, they had a bit of a sabbatical for a while while they're having children and that. And they're like, Lauren, we want to get back in the game now. And that was a really smart thing that we could do that accelerated them getting back into the property market. Yeah. So, little tips like that, save them a few years absolutely.
And actually, from a financial planning perspective, if the clients are very comfortable with that, is not a bad strategy. Obviously, it depends from person to person, right? Yeah. But, that is smart debt. And you want to keep and have as much smart debt until you retire if you can stomach the amount of debt you have. So absolutely. Because all that is tax deductible. So, and doing that means you're keeping some taxes, but at the same time, the interest is an investment.
That's right.
It shouldn't be seen as a cost, which is very important. Yeah. Yeah, no, that's good.
They're happy.
Yeah, that's good. As long as you're happy, that's the main thing.
Exactly.
Okay, so when building an investment property portfolio as well, how important is it to diversify across different property types, locations? What are your thoughts on that?
Yeah, we all know the saying, don't put all your eggs in the one basket. I actually prefer don't buy all your properties on the same street unless you're planning on running for mayor. So absolute diversity is key. And it's not just location. It's not just not only buying in this town or this state. It's also the type of property. Are all your homes under your property portfolio units, which might make more subject to risk in the future? Or are they all homes and therefore you might not be catering for a different segment of the market? So whether it's the type of property, where it's located, what name they're under, so the structure of who's actually owning that property, diversification is huge. And I'm not the expert here. That's where you'll be the expert. But absolutely. There's something all investors need to think about. And
I guess many investors only think about resi properties, which is such a, because it's obviously the most common, but it's like, well, the industrial properties, your office spaces you can buy, there are lots of other properties that you can actually have and then use as diversification. I always encourage my clients as well, don't put all your eggs into the property basket, but even within property as an asset class, there are different types,
You're spot on. That's right. Exactly. You don't want 10 homes and no commercial properties. It might not work for your scenario. So
yeah, correct. And doing that across different geographical locations as well, because things like land tax kick in per state, so it's definitely good for people to understand that okay, well, if you buy too much in New South Wales because you want to maybe you don't want to run for mayor, but because you want to have it on the same street, you're going to end up paying more land tax than if you had spread that across, So all those things are very, very important as well. Yeah.
Definitely.
Okay, so if someone's listening to this and, they're starting their property investment journey, what is the first step you would recommend for them today?
Reach out to me today.
Yes.
Honestly, it doesn't matter if you're like, I want to buy an investment property in 2 years' time. I'd honestly say no time is too early, because there could be some crucial things that we can start doing today that make sure in 2 years' time you're ready to roll.
Yeah.
So jump onto my website. Yeah. So apexmortgageadvisory.com.au and we'll probably put a link.
We'll put a link down there, so people can reach out.
And one of the greatest things I'd love to give to any of your listeners is a complimentary copy of my book.
Amazing.
So I have just published a simple guide to buying your first investment property in Australia. And I would absolutely love to share that with all your listeners. Now, don't worry, I'm not going to include a 2-page document with all the acronyms.
Yeah.
There's actually...
I can't see any acronyms. I just see
acronyms.
Nice simple terms.
Spot on. It should be something that you can digest in a few hours, not a few weeks. So we don't have time to go through these big novels. You just need to know, what are the key things if you're thinking of buying investment property?
Yeah.
Read my book. It's nice and simple.
Yeah. And I think, and look, I always believe in using professionals, but one thing I always get my clients to really understand as well, they need to understand the basics.
Yeah.
You don't have to become the professional, but understand the basics. So when a professional is sitting down with you and saying, okay, we'll get your loan value ratio to 80%, you just know what loan value is. And okay, we're trying to avoid lender's mortgage insurance. You understand that, but don't have to know, okay, who is providing lender's mortgage insurance, what is the loan value in this bank or 50 banks, but the basics really help. And I think this is really good.
Spot on. That's right. Absolutely. And Victor, only because I really, really like you.
Okay. Yes, tell me.
And we've been working together for many, many years.
Yes.
So if there is any of your listeners on the call today that have a loan for more than $500,000, you want a complimentary banking review, if we refinance you, I'm going to cover up to $750 of their refinance costs. So reach out, even more of incentive to have a look and see if we can help make that loan set up for their needs.
Yeah. And, especially those that have been in somewhere for 2 years, it's like, well, it's perfect. So it's like there's a good incentive to then review that and get it done. Yeah. Amazing. Thank you very much for that, Lauren. Okay. So, are you on any socials? Are you on...
I am. I reckon I'm trying to relive unfulfilled acting career really badly. But no, I am. I'm on TikTok, Instagram, LinkedIn, Facebook. You can find me almost everywhere. So yeah, reach out.
Perfect. That's good. Look, every career starts somewhere, so that's fine. You can build on that. Amazing. So, Lauren, thank you very much for joining us today. Thank you for offering that amazing gift as well to listeners out there. And we know that once sit down with you, you're going to give them a better deal and explain lots of things to them. And they get a copy of the book as well, which is amazing. So thank you very much for joining us on the show.
Thanks for having me, Victor.
Yeah. So thank you for listening today. So you've heard from Lauren, who is a specialist mortgage broker from Apex Mortgage Advisory. So please reach out to her if you have any questions, or if you want a connection and you have my details, reach out to me. I'll connect you as well. And she'll be sure to ensure that, your mortgages are reviewed and you're building that investment portfolio, or even just getting into your first home as well. Just a quick note, ensure that you buy with your brain, and this is what Lauren says. And you ensure, obviously, you make good decisions as to working with other professionals around. So please share this video with anyone who you think would benefit from this as well. Thank you.